Guys, a possible ETH ETF is among us, and buying ETH is not the only way to profit. As you're going to see in this video, I'm going to show you how to set up a strategy to where if the ETH ETF gets approved or if it doesn't get approved, you'll still be able to make triple-digit yields via yield farming, right? Market makers have been yield farming or market making since the 19th century, and there are strategies to deploy when they think an asset's going to go up and strategies to deploy when they think an asset's going to go down. And market makers make the most money in recessions, bull markets, bear markets. It doesn't matter because they make money off of volume, and that can be buying volume and selling volume, aka they make money no matter where the wind blows. So in this video, I'm going to give you my thoughts on the ETH ETF approval. I'm not going to go super deep into it because on the Know It All channel, we made an in-depth video on all things ETH ETF. So definitely give that video a watch if you haven't, and subscribe. We give you some good value there. We're going to talk about what yield farming is, and I'm going to show you my yield farming strategy to capitalize on if the ETF gets approved or if it doesn't get approved. All right. So before we get into it, I do have to say this video should not be taken as financial advice. Consult with your financial advisor before making any investment decisions. These are just my own perspectives, research, and should be treated as such. So without further ado, let's jump straight into the content. So BlackRock has filed for an Ethereum ETF along with 7 or 8 other applications. But the crazy thing is, BlackRock, out of over 500 ETF applications, they've only been denied once by the SEC. They got the Bitcoin ETF approved, and they started their RWA, aka Real World Asset Fund, on Ethereum. The minimum amount to invest is $100,000, and they already seeded it with $100 million. Now, we made a whole video covering the BlackRock ETF fund on the Know It All channel as well. So the link is in the description for all the videos I'm referencing in this video. Give that video a watch if you have it. And like I said, subscribe because we give you a lot of macro alpha there. Now, if an ETH ETF gets approved, I think ETH is going to pump hard, and assets, aka altcoins built on top of ETH, are going to pump even harder. Why do I think that? Well, just look at what happened once the Bitcoin ETF got approved, right? And then you have to look at it. Ethereum is a utility. Bitcoin is a store of value. Utility trumps store of value all day long. This is why I know Ethereum is eventually going to flip Bitcoin. And even if you look at TradFi, oil is worth more than all precious metals combined. And the reason why I say oil is because Bitcoin is like digital gold. It's meant to store your value long term, but Ethereum is like digital oil. It has multiple use cases, just like real oil. We use oil in our hair. We use it to pave roads. We use it to make plastics. We use it to make Tupperware. Like, it's all kind of use cases for oil, just like Ethereum. You have NFTs, you have DeFi, you have layer 2s, you have all kinds of things you can build on top of Ethereum. So when the Bitcoin ETF got approved, we saw Bitcoin hit an all-time high before the Bitcoin halving. So it's not crazy to think that we'll see ETH hit an all-time high as well. And it'll be a lot easier because Ethereum's market cap is way smaller than Bitcoin's, right? It's a drop in the bucket, and it's already sometimes deflationary with EIP 1559. It's had multiple upgrades to make it favorable for layer 2s, for gas fees, for all kinds of things. So ETH has just been upgrading and upgrading. And if an ETF gets approved, the custodians are going to have to continually buy up ETH in order to be able to fill orders, just like they did with Bitcoin. But just keep in mind, I just want to drill this home. ETH's market cap is much smaller than Bitcoin's market cap. So it's going to take way less buying volume to pump the price. Now, what do I think will happen to ETH's price if the ETF doesn't get approved? Well, I think it'll be a temporary drop, but I don't think the drop will be long because we got the Bitcoin halving coming up, and then Bitcoin's going to continue to move, then money's going to find its way into ETH, then large cap alts, then mid caps, then meme coins, even though meme coins have already been pumping. So either way it goes, I think we're going to see ETH reach an all-time high this year, exceed an all-time high. I think we'll see around a 10, 15K ETH. It's just a matter of if an ETH ETF gets approved, how long it'll take for it to reach an all-time high. So just to summarize, if it gets approved, pump. If it doesn't get approved, dump, then pump. So now let's cover my yield farming strategy that I'm going to deploy to take advantage of no matter what happens. But before I get into that, I do have to talk about what the hell is yield farming. If you haven't watched my channel before, yield farming is essentially market making. When you go to buy your stocks on your brokerage, on Fidelity or Webull or Robinhood, The brokerage is just the middleman between the investor and the market maker, right? So when you go and buy your Tesla stock, it's companies like Credit Suisse, Citadel, Deutsche Bank, Goldman Sachs that's saying, hey, here's 50 million in Tesla, here's 50 million in cash. Only use my liquidity when the price of Tesla is between X and Y, and they profit off of what's called the bid to ask spread, aka the trading fees. And then there are market makers for stock markets, bond markets, commodity markets, crypto markets, like Forex markets. Every market needs a market maker to make a market, so there's enough inventory for investors to buy and sell without them experiencing too much slippage. So now, for the first time in history, everyday people like you and I are able to be market makers on what's called decentralized exchanges in DeFi, such as Uniswap, such as Trader Joe, such as QuickSwap, etc., etc. So now if I think Ethereum is going to trade between the price of 2,000 and 5,000, I can make that my range. And whenever the price of ETH is between the range that I specified, I make passive income. The amount of passive income depends on the volume in the TVL inside of it. If you have a TVL and then you have a volume that's higher than the TVL, you're going to make more money. It doesn't matter what the size of it is. And you get paid in proportion to what your liquidity makes up in the pool. So if in the ETH USDC pool, for easy math's sake, if it's 100K in there and you have 10K, 5K in ETH, 5K in USDC, your liquidity makes up 10% of the pool. So you're going to make 10% of all the trading fees inside that pool when people go from ETH to USDC or from USDC to ETH. So now that we know exactly what yield farming is, I'm going to show you my yield farming strategy for an ETH ETF approval or non-approval, if that's a word. All right, so here we are on top pools on ETH mainnet, and if you have like over $10,000 to $20,000, ETH might be where you want to be. But if not, look on Arbitrum, look on Optimism, do the same exact thing. So you can see here on ETH USDC that in the past 24 hours, there's been $230 million in volume, and the TVL is only 179. In the past 7 days, the volume's been $2 billion, right? So that means you're going to make a great amount of passive income in this pool just because the volume is higher than the TVL. And if we click on it, you can see that the volume has been increasing. And look at where it was in the last bull market, right? It's only going to continue to increase as the price of ETH continues to go up. And I think people are eventually going to start pricing in an ETH ETF. Even if it doesn't get approved, people are going to think it is just because the likelihood of it getting approved is very, very high. So either way, ETH is a good long-term investment. So I want to be providing liquidity for it in case it does get approved or if it doesn't. So now let's talk about the ranges I'm going to set. So let's talk about if ETH does get approved. If ETH does get approved, I want to set my range from this blue line at the bottom, pretty much 29.35 all the way up to $7,000 because I think that's what ETH can hit. And I think it'll take a few months, but I'm okay with that because the longer it takes, the more passive income I'm making. And if it goes out of range to the upside, well, hey, I just took profits in USDC and I get to get out with my ETH and my USDC. However, let's say it doesn't get approved. The next level of support that I think we'll go down to is back down to the $22.71 level, right? So I'm going to provide liquidity from 4,456 down to 2,271. I'm going to use Aperture Finance, and I'm going to program in there that says, once I go out of range to the downside, take me out of the pool completely. And what that's going to do is allow me to buy the dip and get paid passive income to buy the dip. Remember, the deadline for these ETFs, they go out to the end of the year, but most of them are in May. So as we're, coming on to May, right now it's March 30th, I believe. We have a month to yield farm before we get a decision, unless the SEC is just like, hey, we want to make the decision early. They usually don't do that. So we have a good amount of time to be in this pool and make some good passive income. And the cool thing about it is these ranges overlap. So if price stays within this range, I'm going to be within my blue range, which is me thinking that the ETF is going to get approved, and within my red range, which is me thinking it's not going to get approved. If it can stay in both, hey, great. And just so I'm clear, I am providing liquidity inside of both of these, right? So from this blue line to this blue line and from this red line to this red line, both of them at the same time because you don't know what's going to happen. If it moons and it goes out of my red to the upside, hey, I'm in 100% USDC plus my profits, but I'm still going to be within range on my blue one. And if it goes out of range to the downside, like I said, I just bought the dip on ETH at 29.56 and at 22.71 the whole way that it's going down. And I am very, very happy with that because I think, like I said, we're going to see ETH hit 10 to maybe 25K this cycle, over 100K in the long run. So guys, with that, I hope you got value from this video. If you did, I ask that you consider dropping a like, drop a comment, subscribe for more video updates. Also subscribe to Know It Alls, where we give you a more macro view. Other than that, I thank you guys so much for tuning in. I love every single one of you watching, and I will see you in the next video. Take care and trade safe.